What's up everyone, Dylan here. I wanted to hop on and do another episode of the weekly analysis video. As always, I'll be covering what has been happening in the market, going over recent price action, and then going forward, I'll talk about some key areas to look at, especially ahead of tomorrow's CPI event and the Fed Minutes event. So, the last time I posted was April 3rd. It was one day ahead of this massive drawdown, right? Why did that occur? What happened to trigger that? Okay, so as I showed you guys during the last video, I gave reasons why as well. I said that I had bought this dip. Okay, I ended up selling out at two different targets, and then later on I got stopped out. Okay, for a small win. So going forward, the next day after I posted that, we had this massive move to the downside. Okay, what caused it? Why did it happen? What can we look out for in the future? And I'm going to try my best to do, kind of tell you guys what to look out for to kind of look past a lot of the noise that has been happening in the market. Okay, so the two most cited reasons for this reversal right here were you had Kashkari's idea of no rate cuts, right? That was the first most cited reason. And I personally disagree with that because I'll tell you guys here, right? On that same day, that Thursday, right? This is what US 10, the US 10Y did, right? In other words, it's the US government bond 10-year yield, right? 10-year yield came down. Okay, so the fact that the 10-year yield declined tells us that the market didn't think that Kashkari was hawkish, right? And if it did, then yields would have risen. So for me personally, I don't think that it was the Fed talk that caused that move. Especially, I don't think that it was solely the Fed talk. Okay, the next most cited reason was the headline of Israel prepping for an Iranian retaliation, right? There were news headlines coming out that were saying that an Iranian retaliation was imminent, right? And, about to come in the next 48 hours, right? So you had a few different risk assets move in a sharp way, right? We could look at crude oil, right? If we look at crude oil, you could see on that day, Thursday, it had, rallied aggressively on those headlines, okay? And as a result, the S&P also did the opposite, right? So you have some inflationary pressures as well with some of the energy names going to the upside, okay? However, since then, nothing materialized. So like I said, on Thursday, it was saying that it was imminent, right? It was going to happen in the next 48 hours. Israel was prepping. They were moving people around and getting ready for the attack and so on and so forth. And here we are on Tuesday, and nothing has materialized. I'm not saying that it can't going forward, but what I am saying is those two most cited reasons for this move here have kind of diminished. And as a result, we've been seeing a lot of chop since then, okay? So, I'm going to try my best to kind of give you guys what to look out for going forward to kind of look past the noise, as I mentioned, okay? Tom Essay, who's an analyst, he did a good job in explaining that this is what you should kind of be looking at going forward, okay? He said, let me see. He says, let's see. The easiest way you can tell if a headline or event really matters to markets is to look at the June rate cut probability, okay? And this is public information. You just type in on Google, type in CME Fed Watch tool, and you will come to this link. I believe it's the first link. What you should do, right, by default, it's going to have May 1st, right? You go ahead and click on June 12th, and you could see that this is the one that we're looking at right here, this 59.2% as of right now. He mentioned that, if that number, right, if for the 500 to 525 basis point target rate, right, for the June date goes below 50%, that is perceived as hawkish for the market, and as a result, in other words, that's bearish. Okay, so he basically says that as long as that number's above 50%, no matter what headline comes out, whether it's geopolitical driven or Fed talk or, CPI, PPI, Fed minutes, you name it, any headline that you see, as long as that thing stays above 50%, it should be perceived as bullish for the S&P and the overall market. And as a result, dips should be short-lived, okay? Now, can this, is this going to be flawless? Who knows? I can't predict the future, but I do believe, or I do agree in that this might be the best method to kind of gauge whether or not headlines are really, really solid. Okay, because like I said, since Thursday we've been seeing tons of different headlines on geopolitical issues, right? Some are bearish, some are bullish, right? We've seen just a lot of nonsense in between, and as a result, like I said, the S&P has been going sideways. So a lot of those headlines have not materialized much further, since that Thursday move. Okay, so hopefully that makes sense. So I want to get into a little bit of technicals, and then going forward, I'll get into what to look out for tomorrow's CPI, because tomorrow's CPI is a very, very important piece of data. Okay, the clearest thing that I've seen in terms of support is this trend line. Okay, all the way since literally the year to date, right? January 5th of 2024, price has bounced here, call it 5 different times, right? You have one time down there, 2 times, right? So once in January 5th, another time January 17th, and then more recently, you could see it's almost perfect, right? It bounced there on April 4th, again on April 5th, and then again on April 9th today. Okay, so that line has defended the dip from Thursday, right? That massive dip, as well as a retest on Friday, and then again today's pretty big dip as well, bounced right there. So going forward, if a line has tested and held 5 times, you definitely want to look at that level going forward. Okay, so I would recommend you guys, or anyone watching this who wants to follow this line, draw it on your end so that you don't have to guess where it's at on my end. Okay, going forward, you have this 5,272 level that has been acting as clear resistance, right? It failed there Friday, April 5th, and then it failed there again this morning, as well as later on in the day at like 4 p.m. Eastern time. So going forward, the bulls want to see price break above, ideally with momentum, and then get bought above on dips. Okay, so not only do you want to see a breakout above, but you also want that level to then become support on retests. Okay, because you guys know as much as I do, you could see a breakout followed by a fake out to back down to the downside. Okay, so that's why you want to be very observant in seeing if that area, it doesn't have to be perfect, but that general area then becomes support on the retest. Okay, and with tomorrow's CPI event, things can get very, very volatile. So it's important for you guys to kind of come up with hypothetical scenarios beforehand, so that you guys are one step ahead of the game. Okay, another thing we have is this supply zone, right? That was the area, that the basing area before that massive drop to the downside. Okay, so if we do in fact get a nice breakout above, and then that dip gets bought, if there even is a dip, right? There might not even be a dip after CPI. This general area up here, right, this 5,300 to 5,310 area, is going to be important as well, because if sellers are strong, I would assume that that is where they're going to try to defend. Okay, now, are they going to defend it 100%? Who knows? Okay, but if I'm looking to sell, I'm going to be looking at that particular area to assume that sellers are probably going to try to defend this previous swing high. Okay, So that's another key area. Okay, so very near term, you have 52.72, right? Bulls want to break above, bears want to defend. To the downside, you want to have that purple line that I have, right? That trend line that stems all the way from January 5th. To the upside, above that 52.72, you have the 5300 to 5310. So that is what I'm looking at for the S&P 500 in plain English. Anything else in between there, I basically disregard. Going forward, NASDAQ, you have this very important support zone that's been acting as support since February 28th. Multiple tests. Every single test, including the Thursday drop, has bounced there. Okay, that's another important area to look at in case CPI sells off. Bulls want to defend that area, right? And then on the flip side, if they are unable to and price breaks below, you want to see, if you're a bear, you want to see that area then, defend itself on the retest for, a previous support become resistance. Okay, so that general area on the NASDAQ is very important. And then the VIX, right? The VIX, here, we're going to use April in particular. April VIX, which is the spot contract, right? I have this general area 16.25 to call it 16.50 that has been acting as clear resistance since March, since the beginning of March. Every single wick that gets in there has been stuffed. And then to the downside, I would personally look at this general area down here, which is where the breakout or the rally from Thursday initiated on the VIX. So the bulls would want to see this area get defended if tested. And if it's unable to hold there and it continues to deplete, I would assume that the S&P is going to continue higher if that occurs. So those areas are very important to watch in my eyes, right? So there's that. And then in terms of CPI, the main thing to look out for is the core print, right? So there's a headline print and a core print. Core CPI last month was 3.8%. That is the magic number in my eyes, okay? So essentially, if the core CPI print tomorrow morning at 8:30 a.m. Eastern Time comes out at 3.8% or lower year over year, in my eyes, that should be perceived as bullish, okay? Right? Why is that? That would, like I said, let me see, I wrote down. That would enforce that inflation pressures are still easing and would make a June rate cut more likely, right? Going back to that Fed Watch tool, right? If you have a 3.8% core CPI or lower year over year, that Fed Watch tool will more than likely remain above 50%. If you get something above 3.8% year over year on the core print, right, 3.9, 4% or higher, that would not be good. Okay, that would mean that inflation is sticky and that rates will probably stay higher for longer, right, above the Fed's expectations. And then as a result, that Fed Watch tool will probably more than likely drop below that 50%, and it'll pressure the markets. So that's it for me. If you guys like this video, thumbs up. Please subscribe. It helps. It goes a long way. And as always, feedback is appreciated. Peace.